to look at the stock market and see how it fared last week. Friday, the market did ended negative 0.50%. The all share index did ended there, and of course we saw that the all share index went down. I mean, it closed at 140,295 basis points, and of course the market cap 139 trillion. 139 trillion that is now standing now, as the case may be. Now let's talk to somebody who should know, who is right now on the trading floor of the Nigeria Stock Exchange, to give us his perspective about the factors responsible for the current trading pattern. David Adonri is the vice chairman of the High Cap Securities, vice chairman of the board of the High Cap Securities. He joins me via phone from the trading floor of NGX. Good morning, Prof.
Thank you very much. Good morning and happy New Month.
All right. Thank you, Prof. Happy New Month to you too. Now we've seen that it just like the bulls and the bears were actually, having what we call maybe trade by barter for some weeks. The bull were actually, dominating, but it does appear that the bears is back and then fully back on the trading floor.
Last week, the bears engaged with bulls now, as you. And drove them away from the market. So what was a very bearish market that they had. The major indexes declined from the channels.
Prof, it does appear that we have some problem with your audio. Let's take a very quick break. We'll call you back shortly.
Okay.
We'll go on a very quick break now. Glad to have you back. We now have clear, audio now from Prof. Prof, continue along that line of thought that you were before we went on that break.
Yeah, so the market was completely bearish last week, with all the major indexes declining. It was a week in which everybody was actually shaken, because not just the indexes that are declined across board, but the volume of trade and value of trade also declined, indicating therefore that the market was very much bearish, and that an intense correction was taking place in the market last week. So before then, the insurance sector had prepared the market, and if you look at the numbers for the month, you will see that the insurance actually appreciated by over 40% in the month of August. However, last week, the drive was reversed into the negative challenge. So that altered the stability of the market. And of course, the banking sector has not been vibrant. So far, majority of the banks have not released their half-year results because we are still awaiting the clearance of CBN. And so that has led to a lot of suspicion in the minds of investors. The public think that the expectations of half-year dividends or interim dividends usually paid by the banks may not be realized. And so there has been a pullback in that sector. It was a major fall on Friday when the price of Zenith Bank, which for all intents and purposes leads that sector, declined from over 70 naira to 66 naira. The GT Bank that had been firing on all cylinders suffered a severe pullback. That affected all the major banks. So the banks actually constitute the arrowhead that drives activities in the equities market. One funny thing you see is that not just the equities market that suffered huge decline last week, even the bond market, the sovereign bond index fell last week for the first time in recent times. Although that in itself is a plus point for investors because that means the yield on the bonds will be higher now. So precisely, I think that some of that is what we experienced last week in the market. The major pullback occasioned by corrections and also the anxiety surrounding the non-release of the half-year results of banks. Thank you.
All right, very good, Prof. One other thing again is the fact that we saw the bull. I mean, staying for like 24 days uninterrupted. How long do you think this BS sentiment that we're seeing in the market? How long do you think it will stay?
Generally, the BS always predominates in the market because the bull run is really temporary. It comes on when there is a price-sensitive information hitting the market and then investors react. Usually after that reaction, the market becomes completely stable, becomes very stable because in the course of reacting when there is a bull surge, there is only some evidence we have shown the value of securities above board. So usually there will be a correction thereafter to expunge the exuberance from the reactions of the investors. So that is why usually the bearish market predominates the bullish market. But at a point, it will come to a level of what we call a dynamic equilibrium. So now we have been in a bearish state, and that bearish state in itself will probably hit the point of resistance in due course. Because if the banks release their results and investors' expectations are met in terms of some of them distributing interim dividends, of course, investor sentiments will change to positive terrain, and then that will also drive the market up. But the fatigue has already set in the insurance sector. So barring any new information really, I think that sector should be in a state of equilibrium. So a spike in the banking sector should the results hit the market now and take the market into a state of dynamic equilibrium. in which case you have a little movement up today, a little movement down tomorrow. But we are also in a period of the market where the seasonal trend points towards a slow market. Because there isn't anything really to drive the demand for equities now. Perhaps until the end of September, we're moving to October, and the third quarter reserves start hitting the market. So if those reserves are impressive, of course, they will change the direction of the market and can impact the market positively. From the macroeconomic perspective, I think the environment, you may not agree with me, but the numbers, the macroeconomic indicators appear to be summing up and getting better. So from the macroeconomic perspective, there is reason for equities to be stable, a little bit bullish. But what is affecting the market now are the fundamentals of the market itself. You know, so that is the situation on ground, Yusuf.
All right. Given the fact that at this period of the season in the market, historically, is a period where the market is always on a downward trend. Given the fact that many people prefer to take profit, profit of their investment in the market. Are we likely going to see a change in that this year? Is anything different from what we used to know?
Yes, of course. Seasonalities are things that have come to stay in the market. But that notwithstanding, the market is still characterized by a lot of uncertainties. And so history does not really repeat itself so frequently in the market. We could actually have a breakaway from the seasonal trend at any point in time should there be strong countervailing forces that can change the direction of the market. So this year, we are having strong macroeconomic support for equities, and then the fundamentals of the market is strong, except now that it's a little shaking because we don't know why the CBN is taking so much time in approving the results of banks. So that in itself is scary to very many investors, you know. So we are not likely to see a departure this year, within this third quarter of the market not going along with the seasonal trend, you know. But for after the release of those results, from the fourth quarter, the market is expected to start gathering momentum again as investors take position for end of year distributions, and also as portfolio managers reshuffle their securities and then they take position to drive the market to a high level to close the year so that they will have very good numbers at the end of the year in their portfolios.
Indeed. Prof, let's also look at how the market, what you think the market is going to look like this week. And of course, you can also tell us the current trading pattern since you are right there on the trading floor.
Yeah, that's what the market is starting on just a stable note. Nothing dramatic is changing in the market so far. And those sectors are still fatigued. So I don't foresee any serious reversal in the direction of the market. But there could be stability. That is a state of dynamic equilibrium where you see some upward spike today tomorrow we see a little decline, throughout this week. Until perhaps the banking results hit the market. Because that is when we now start seeing a clear direction for equities. So that's it. So that's my prediction, Yusuf.
All right, Abbas, thank you. Prof. David Adonri, Vice Chairman of the Board of High Cap Securities, we must thank you for your time and contributions on Business Daily today. We appreciate it.
Always a great pleasure. Thank you very much. And bye.
All right, have a nice day on the trading floor. Yeah, that was David Adonri there speaking about the stock market performance and, of course, the outlook for the week.